Hello, investors. The month of September has been a good month for your portfolio. Uh, the benchmark was down, I think, negative 0.3% or so. Your portfolio is up more than 2%. So we've been able to create an alpha of over 2.5 to 3%. So it's been a good month. It's been a good month of recovery. Uh, each month I come and report to you this number, say that vis-a-vis the index, how we've done. And sometimes I wonder how justified is it uh, in our style of investing. So let me cover that topic this month. So what we are is essentially trend investors, and we really never try to match or shadow our portfolio based on weightages that there is in the index. As trend investors, I look to find three or four dominating trends in the market, sectorial, thematic, and try to sort of navigate your portfolio to those stocks. So we really never looked at the index as this composition, so we must have this sector, etc. That is a strategy very often you will find with mutual funds and some PMSs. But we really feel that actually we are looking to outperform the index by a margin. So if you want differentiated results, you will have to use differentiated means. And what we are looking at mega trends is to identify three, four, five such themes and to have a concentrated allocation in your portfolio in those spaces. So as and when the markets trend, unfortunately last 3 years the markets have been totally flat, but whenever the markets trend, what you have is a massive outperformance. We saw that in 2000 IT, saw that in 2008 in infra. So the thing is that the objective is to ultimately outperform the market by miles, and it is possible if we are able to identify the dominating trend and be overweighted. So let me share your portfolio and how this strategy has been modeled. So what you see on the screen is nothing but the sectorial allocation of your portfolio versus the index. So the red buildings represent your portfolio allocation in the sector. The gray buildings represent that in the Nifty 500, what is the allocation to that sector? So let me take this forward with an example. So where the blue star is, you can see that this is the pharmaceutical sector. As you know, we have been very bullish on pharma, and that is why the allocation in your portfolio in pharma is almost 19%. That's a very big allocation. Compared to that, the allocation of pharma in the Nifty 500 is only about 5 to 6%. So clearly you can see that how we are overweight and how we feel that there is a trend emerging in pharma, and that is why you'll see that we have allocated. The second is specialty chemicals. Again, the allocation of specialty chemicals is about 1% in the Nifty 500, but we have 14%. So what you can clearly see is that we do not try to shadow the index. We try to focus on trends and themes and try to make sure that you are overweight in those sectors where we feel the big mega trends will play out. The next is consumer durables. Again, we have a 15% allocation versus 11. And this has been an overweight sector for us for the last few years. In fact, it is the backbone. The sector I am very bullish on and we have been allocating more towards is IT. So though it may seem that the allocation is lower than the benchmark, but if you include Reliance, which is the digital play, and here it is included in oil and gas, you'll find that our allocation to IT, software, digital is higher than the benchmark. And as time goes, I want to actually take this allocation higher. So you will see that clearly Marathon Trends focuses on identifying the larger trends and taking concentrated or overweight bets in these spaces. Similarly, you will find that we have zero allocation to sectors like auto, cement, power, consumer durables. versus a very big allocation by the index. So not only can we stay overweight in spaces we like, but we can also be underweight in spaces we don't like. So this is really the composition or the philosophy or the thought process that goes behind creating your portfolio and creating sector allocation. As I repeat, and I say that unlike a mutual fund or some other PMSs, we do not try to shadow the index. We do not say that, oh, we must have so much in cement or we must have something in power because that is in the space. No, the thing is that if we feel that there is a large theme in specialty chemicals, we feel that there are some great companies, stocks to invest in, we go all out and invest in them. And that is why you will find that our portfolio sectorial allocation is very different from the benchmark. So what is it that we look at? Essentially, we look at the macro themes as to how the sectors are playing out, which is technology, demographics, and government policy. They influence company performances, and finally, they come down to price. So let us cover three such overweight sectors in your portfolio. The first is pharma. So you will notice that pharma as a sector post 2016, that's where the red arrow is, has been a relative underperformer. Now, mind you, this is not the pharma index. This is a ratio chart. A ratio chart is nothing but shows the under or over performance of a sector compared to the Nifty 500. So you'll find that pharma was outperforming 13, 14, 15. That is why on the left you will see it going up. But post the US FDA issues, pharma compared to the market started struggling and going down. So that is really a reflection of a downtrend. And that is why we really had no pharma stocks in 17 or 18 in your portfolio. But you will find that post 2020, especially post COVID, we feel that there is a very big chance of an outperformance in pharma. And you can already see that is taking place. And we feel that there's a lot more to cover. And that is why we go and allocate money in sectors or themes that we feel will outperform. So that is very simplistically put what trend investing is all about. So as I said, we study the macro, the themes that are playing out, we study company performances, and finally, through price, we try to look for those sectors and themes which we feel will outperform the market. The second sector, again, I'm very bullish on is IT. So you'll see that where the red arrow is, this is 2003. After the big fall in IT in 2000, when the bubble bust, you'll realize that IT for almost 17 years has been sideways. It has done well, but it has not been a massive outperformer. However, you will notice that again post-COVID, due to the whole surge in IT usage globally in all spheres of our life, IT as a space and the kind of numbers the companies are reporting is phenomenal. So that is why you will find that our weightage to IT is increasing. The third space, which has been a very steady part of our portfolio, is the consumption theme. So in 2008, after the financial crisis, you will see that consumption steadily has outperformed the market as a whole. So this really is our thought process, the way we construct our portfolio. Because as I said, we look at the macros, we look at the three basic forces that influence trends, which is demographics, government policy, and the change in technology. Then we go out and look at those companies which in these spaces are outperforming or likely to be outperformers. And in the third step, we go and see the price performance and look for those spaces or those stocks which we include in your portfolio, which we feel will be relative outperformers. So to sum it up, as your portfolio stands, you can see the sector weightages. You can see that how we have navigated your portfolios towards themes which we feel will be great beneficiaries in the post-COVID world. There will be little adjustments made from time to time, but this really summarizes our philosophy of trend investing, where we do not like as I said, mutual funds or some PMSs try to shadow the benchmark, but we go and look for themes which will feel will outperform over the coming few months. And as the line goes, that if you want differentiated results, you have to use differentiated means. And this is what we offer at Marathon, which is a differentiated approach. And it's only a differentiated approach which will create differentiated results in the long term. With that, thank you for another great month and stay safe. See you soon.